So now we're going to get into the short-term view for the U.S. stock market. I know you've been all waiting for this. Yes, we've talked about the market turning down, and I did give you an educational piece of what it would take. How will we know when it's really happening? Because we need to get those 7-8 stocks that are holding the market together to actually turn down, and that principle of commonality will probably have them all turning down together. The market is right now in a time period where it's trying to rally but not able to hold rallies, and that is changing. So let's move over from this bond market to the S&P 500. And I've added a little bit of a projection in here. The reason I did that was because I want you to essentially see how you can get a good sense for what is actually happening versus what might happen. So just as I showed in the NASDAQ earlier in the show, you can see that we have had a period of positive momentum right in here and positively configured cycles moving up. I am projecting that to fail in this resistance zone because of the sum of the evidence, which shows that the intermediate pattern, which is a dominant force, is peaking. That's why I have this turning down right over here. It's like when this one turned down over here and all of a sudden accelerated on the downside and then gave you a collapse of 35% there. Remember, I'm not projecting 35% down now, though I'm projecting 12 to 20% down now, which is, I think, takes you into the summer. I would like to see it down over 20% just so that this whole idea of a new bull market is just wiped out, because I think that's ridiculous. So here are the two projections. If you were to stay in this normal upward pattern that you see right over here, this is probably this gray dot, which is illustrating a little, let me get a closer look in here so you can see, which is illustrating the second track of what I think this corrective period would be. This is the more negative track. I think it's the highest likelihood. You can see the failures going on in here. Anybody who wants to know why a down bar is green, it's because the slim ribbon programs in momentum. So as the momentum is positive, these all stay green. When the momentum turns negative on this programming, as you can see right over here where the momentum turned negative, this all turns red. Also, we put in here when the projection oscillator gives you these signals, it gave you the last buy right over here, but you could see it's not quite giving you the strength. And that's coinciding with what I believe about the intermediate patterns weighing on it right now. So what we are projecting is the highest likelihood that the market chops in this area and then accelerates to the downside. It needs to break under 29.65. This area right over here, that support, which is, that's not 29.65 is not what that is. That's that support right over there. Actually, this low right over here is, yeah, 29.65. That is right. So this is slightly out of place. I just need to move this right down over there. Well, that's the intermediate 23% fib. Let me put that back and duplicate that. And there's that 23.65. So there's the importance of those two numbers right over here. The intermediate fib right over there and the cycle low right over here, that if it breaks down underneath that 29.65, that would coincide with the breaking of the NASDAQ. Also, of course, that we looked at as the potential. So you can see the failures in here. We're going to call the next week the likelihood of more chop, but then moving down. Here you can see the support zone that you have in here. This is 30.78, 30.58, and the bottom of this is about 30.32. This is where we would think that it might stop. You can see the slim ribbon faltering in here, but not quite turning down. And I said this rising phase is very important. If you can't get in here and above that area, like this alternate projection is pointing to, then you know what's going on. You break under the slim ribbon here, under the support, under this 30.32, and it's in a lot of trouble. I mean, then you're just going to know. So this is a picture of what we think. The sum of the evidence is saying to us that the intermediate is peaking. that sets up upside failures that you see happening right now. As you see right there, we think we're going to see that, and we believe there are two waves to the decline coming, as you see projected right in here. This wave here, which takes you into July 8th, and another one over here that takes you into the end of July, beginning of August. That's what I think is going to be the corrective period here in the summer that we've looked for. And again, it could be down 12%. That takes you down to this level. It could be down 20%. That takes you down to this level, about 2650-ish or so. It would be under there, about 2600. Would take you down about 20%. You can get these live charts, of course, on your askSlim platform. If on your Thinkorswim platform, which is our preferred broker, just by becoming a level 4 member. And you get all this information, including the projection oscillator and our proprietary market condition indicator, option bias indicator, all of those things in level 4. So the two tracks that we're looking at, we think it's a high probability of the more negative track is what the market is facing in here. And we just gave you all the important levels as we're projecting, yes, a pretty weak summertime here, and it's not that far out, we believe. So not that far out, guys. So this is what we're going to look at, and we will, of course, do updates on a regular basis for our members who get this information. You will, as a free member, in our preview period that we have, you will get this kind of information in the stock index report snapshot that comes daily in the afternoons, that you will be able to get a peek at the updates in here, which Matt does a fantastic job in. So that's it for the stock market and our projection in here, which is pretty weak.